Bitcoin is a decentralized cryptocurrency that is created by the combined processing power of miners, individuals, and groups of people who work to verify transactions on the Bitcoin network and are rewarded with Bitcoins in exchange for their time, computing power, and effort. Gold has long been considered a safe haven asset choice of investment. Bitcoin and gold have an inverse connection with the US dollar and are frequently purchased as hedging instruments. In this video, we're going to discuss gold versus Bitcoin, which is better. The video is going to be amazing, so make sure you stick to the end. Before starting the video, be sure to smash that like button and subscribe to never miss out on any of our videos. Gold has been around for centuries. People value gold because it's a source of security that has been tested over time. While Bitcoin hasn't been around during a major financial crisis like the Great Recession, for ages gold has served multiple purposes. It looks nice and bright and is considered auspicious. Not just for wearing as jewelry or storing as an asset, gold is also used in certain religious rituals. Be it a child's birth or someone's marriage, no celebratory occasion is considered complete without a gift of gold. The total supply of Bitcoin is limited to 21 million tokens by Satoshi Nakamoto. Bitcoin is a digital and virtual currency that can be used to buy and sell items and invest anywhere in the globe at any time. Gold has long been regarded as the go-to inflation hedge, but the world is much different now. Today, we have cryptocurrencies that have inflation-resistant characteristics. Bitcoin, the largest and most established of them all, has the makings of an excellent hedge that's arguably better than gold. Gold is a well-regarded asset, widely used by investment professionals. Central banks, major governmental institutions, pension funds, and astute family offices will always have an allocation to gold, says Edward Carr, founder at US Gold Corp. For gold, it has over 5,000 years of history on its side and isn't going anywhere, which means it's super safe, says John Carter, founder of Simpler Trading. Similar to gold, Bitcoin isn't tied to a particular currency or economy. It also isn't controlled by a small group of companies or stakeholders. Rather, it's an international asset class that reflects global demand. Cryptocurrencies have sparked a lot of interest in India recently, and many Indian investors have joined the bandwagon. One of the key features of Bitcoin is that it has a fixed supply, which means there will only ever be a maximum of 21 million Bitcoins in circulation. Given the fixed volume of the asset, if there's continued demand for the cryptocurrency, the value of Bitcoin will theoretically increase, but there's still no guarantee for that. People have always invested in gold, which has provided significant returns in the past. However, in the last year, Bitcoin has outperformed gold and provided fantastic gains. Millions of people who had never regarded digital currencies as an alternative asset have been drawn in by the Bitcoin bull run. Since Bitcoin is a volatile asset, investors may want to have an entry and exit strategy if the price fluctuations become a risk. In the case where the value of Bitcoin moves to your advantage, investors will also need to decide when and if to take some profits. Both assets are commonly used to diversify a portfolio or to protect against fiat currency inflation. Gold is an asset that has been recognized and accepted both as a store of value and a medium of exchange for centuries. Cryptocurrencies belong to a new asset type and have not even completed a decade of existence. Though some of the leading cryptocurrencies like Bitcoin have been compared to gold by many crypto enthusiasts, cryptocurrencies widely differ in their character, utility, and technology involved, and it's not prudent to paint them with a single brush, says Professor Anand. Similar to gold and other precious metals, Bitcoin derives much of its value from its limited supply and growing consumer demand. Both Bitcoin and gold have passionate investor bases, and both are used to diversify and store a variety of valuable assets. However, they're very different in many aspects. They have their own advantages and disadvantages of investing. While conservative investors in India still rely on gold as a stable investment avenue, new age investors are realizing the potential of crypto investments, hence adding crypto to their portfolio to ride the momentum trade. Bitcoin takes a lot of inspiration from gold and even improves upon the yellow metal in many ways, but skepticism and lack of clarity from the government are stopping several Indians from investing in Bitcoin. Bitcoin could be one of the better options outside of equities because it sidesteps many of the political and economic risks associated with the US stock market. In this vein, Bitcoin and other cryptocurrencies are one of the most practical and simple ways for an American to diversify away from purely American revenue, income, and assets. As Bitcoin growth continues, more investors are reconsidering the long-standing analogy between Bitcoin and gold. Gold is preferable for conservative investors, while Bitcoin is worth checking out for individuals who want the adrenaline thrill of a roller coaster. It's entirely up to an investor's decision as to where he or she chooses to invest. Gold doesn't provide any sort of recurring income compared to other asset classes like real estate, income from rental properties, or stocks, income from dividends, says Ricardo Pina, founder and CEO at The Modest Wallet. Bitcoin's blockchain technology is changing the way we transact with one another. Blockchain acts as an intermediary of monetary exchange between individuals, eliminating the middleman like banks and other financial institutions and empowering a decentralized market. Some investors like to think of gold as insurance for their money. If there's a concern about a nation's currency, or if there's an economic collapse, people usually flock to gold because it benefits in times of crisis. Investing in gold has always been associated with a sense of security. Investment in gold offers a sense of security due to stability in price movement. In the case of cryptocurrencies, price volatility is much higher and it's difficult to estimate the movement of price, especially from a short-term perspective. Though investors have been able to sell their cryptocurrencies at a higher price from the long-term standpoint, sometimes they may have to wait for the market to recover from any short-term crash to be able to book any profit. Thus, as of now, crypto seems unlikely to serve this purpose in the future, he says. As a currency, Bitcoin has limited practical use cases in developed nations with relatively stale fiat currencies of their own. But Bitcoin provides a better means of exchange in countries prone to hyperinflation and political turmoil. Like gold, Bitcoin is durable, easily interchangeable, secure, and scarce. But unlike gold, Bitcoin is also portable, transferable, and arguably more decentralized. Gold supply is mostly controlled by sovereign nations like US, China, Germany, and other European countries. Theoretically, anyone in the world can store and easily protect their Bitcoin much easier than gold. However, for the new generation, which does its transactions virtually and is not too much attached to the notion of tangibility, the advent of Bitcoin has given them access to a digital asset that can be exponentially more rewarding than gold in the long run. As institutional and retail investors alike pile into Bitcoin, you might be debating whether this new digital asset has a place in your investment portfolio or if you should stick with something traditional like gold. Bitcoin has been a tremendous speculative asset, and its long-term correlation to other portfolio asset classes still needs more time to work out due to Bitcoin's high volatility. One of the best reasons why Bitcoin is a better inflation hedge than other cryptocurrencies is due to its fixed supply of 21 million coins, nearly 19 million of which have already been mined. An ironclad fixed supply means that new coins can enter circulation, so there's no risk of inflation. By contrast, a country like the US can just increase the money supply through spending and buying government bonds to lower interest rates, reduce the spending power of a dollar, and inadvertently cause inflation. Founder of cryptocurrency exchange WazirX, Nishal Shetty, says, Bitcoin has been given the name of digital gold due to the limited supply of coins available. Hodlers believe that these trades, combined with global availability and high liquidity, making it ideal for storing wealth for longer durations, believing the value will escalate over time. So that's why Bitcoin has been a tremendous speculative asset, and its long-term correlation to other portfolio asset classes still needs more time to work out due to Bitcoin's high volatility and limited supply. Let us know your opinion in the comment section below. This was all for today. Hope you liked the video. Don't forget to subscribe to our YouTube channel. Stay safe, and we'll be back soon with another video just for you guys.